All right, welcome to Talkin' Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about RIOT Blockchain, stock ticker RIOT. RIOT announced their 2021 fiscal year results as well as their fourth quarter results. So I want to go through those in detail because there's a lot of interesting information in there, and RIOT stock is on fire right now. So I want to take a look at the chart and see where it was, see where it is, and see maybe where it's going. So if you're new to the channel, please subscribe and hit the notification bell. And please smash the like button and feel free to leave a comment below. I read all the comments. Also, in the pinned comment below, you will see a link to our free Discord. So please join us over there. We got about 500 people going right now, so we're having a great conversation. All right, let's get to RIOT. RIOT is trading at $19.56 right now. It's up 6.1% on the day. Today is the middle of the trading day on Friday, March 18th, so this is not the final numbers for the day. When we get to the chart, you're going to see that RIOT has had a big week. It's up massively. It's had at least 2 days this week where it was up more than 10% on the day. So we will get to that. But what I want to do first is go through their press release for their annual report. Okay, March 16th, 2022. This is their press release. Simultaneously, they also filed their 10K, which is their December 31st, 2021 annual report. So RIOT Blockchain announces financial results and operating highlights for the year ended December 31st, 2021. RIOT earned record 3,812 Bitcoin and $213.2 million in total revenue in 2021. So that's kind of their headline. Let's get into some of the highlights. Increased 2021 total revenue by 1,665% to $213.2 million. So 1,600% increase in revenue is astronomical. This company has transformed itself. It's almost hard to even compare this year to last year. Having said that, last year revenue for 2020 was $12.1 million. So again, $12.1 million to $213 million. They reported a net loss of $7.9 million in 2021 as compared to a net loss of $12.7 million in 2020. Net loss for the fiscal year 2021 was significantly impacted by non-cash stock-based compensation expense of $68.5 million and a non-cash unrealized loss of $36.5 million on impairment of cryptocurrency. So that's almost a $100 million swing right there with those two things. And those things are non-operational. They're one-time only type things. They're non-cash events. So I am going to be doing another video. What I'd like to do is compare direct costs across all the miners and see what each miner is paying basically per Bitcoin, taking out all of these one-time special events. So I will be coming up with a spreadsheet that basically shows this is what it would take to keep the lights on in a crypto winter. This is how much it would cost them to mine 1 Bitcoin based on their performance in 2021. Produced a company record adjusted non-GAAP EBITDA of $82.4 million. So they do some of that adjusting themselves to try to say, if we take some of these items out, we really made $82 million. We didn't lose $8 million. Okay, they increased their hashing capacity by 444% to 3.1 exahash as of December 31st, 2021, compared to 0.57 exahash as of December 31st, 2020. So they were just about a half an exahash coming into the year. They were 3.1 at the end of the year. That's 444% growth, and they have massive plans to grow again this year. Increased Bitcoin held on the balance sheet by 353% to 4,884 Bitcoin as of December 31st, 2021, compared to 1,078 Bitcoin as of December 31st, 2020. So you can see if you do the math, they held most of their Bitcoin in 2021. They did not sell. So that leaves them with a very strong balance sheet. They have a lot of cash. They have a lot of liquid cryptocurrency if they needed it. Their current assets are over $500 million. Their total assets are $1.5 billion. And that includes about $230 million in deposits on the machines they're going to be adding this year to add to their hash rate. Okay, then if I look at fiscal year 2021 operating highlights, invested in 82,500 Bitmain S19s, and they run through all the different versions of the S19s that they bought. Amp miners, which when fully installed by January of 2023, are expected to achieve an estimated aggregate Bitcoin mining hash rate capacity of 12.8 exahash per second. So 12.8, they were at 3.1 at December 31st. So that's another quadruple. Actually, it's more than a quadruple in their hash rate over the course of the next year. So you can see they were up 444% last year. They're going to quadruple again this year. This is the definition of a high growth company. Okay, acquired Whinstone in May 2021, North America's largest Bitcoin mining facility, and commenced an immediate expansion of 700 megawatts. So 700 megawatts is astronomical. They will have more than enough energy to continue to expand for quite some time. Also announced the Bitcoin mining industry's first industrial scale immersion cooled Bitcoin mining operation in October of 2021. Theoretically, these machines should be more cost efficient and last longer in this environment. So I would imagine if this is working the way they expect it to, they will be migrating a lot more of these into this immersion cooled environment. They had several acquisitions this year. The Wine House was a giant acquisition. This was an acquisition. They did have one-time acquisition expenses of like $21 million on their income statement. So that's another thing that, although that actually was cash, it's a non-reoccurring event. It's a one-time event. This is the 12 months ended December 31st, 2021 compared to 2020 and 2019. But like I said, this was a transformational year, like management said actually. And you can see the numbers are non-comparative. But let's go through them. So they have three different sources of revenue, including some miscellaneous revenue that we don't need to talk about. So net revenue mining was $184 million. So revenue mining, that is their Bitcoin mining. That is by far their main source of revenue, and that is their highest profit thing that they do. Revenue net hosting. So they also host other people's machines and charge them for the electricity and overhead costs. Their hosting revenue is $24 million. And if I go down here, cost of revenue hosting, it's almost $33 million. So they're losing $9 million in 2021 on hosting. However, I think that's part of a grander strategy to scale everything up, and that will help them get to where they're going. So obviously, ultimately, it is not their plan to lose money on hosting, but as they get up and running, that's the situation they find themselves in at the moment. So again, that will course correct. But hosting will never give them the gross profit margin that mining will. However, it does help them scale up to all these gigantic exahash rates that they're getting to in order to mine more Bitcoin and increase this top mining revenue line. So cost of mining revenue, this is their direct costs excluding depreciation. That's $45.5 million. You can see here's the acquisition costs I was talking about. So that's $21 million hit right there. That's a one-time only thing. That's not reoccurring. You'll see it was zero in the previous 2 years. $87 million of selling general and administrative expenses. And I think they said 68 million of that was non-cash stock-based compensation. So again, they're getting an $87 million hit on the income statement, but most of that was not cash. 26 million in depreciation. So that is also a direct cost because remember, they buy these machines and they don't expense them as they buy them. They depreciate them over time. So that is a direct cost of sales. That's their way of recognizing the expense of the actual Bitcoin miners. That is a non-cash item. They spend their cash when they invest in the machines. They then write it off over time. Change in fair value of derivative asset, and you've got impairment of cryptocurrencies. So again, these are giant numbers and they are non-cash numbers. They really don't affect cash in any way, and they will get adjusted up and down over time. They're not actual transactions, they're accounting adjustments. So with all of those things, their total expenses are $235 million, and it looks like they lost $22 million from operations. So again, I'm just gonna go back to their press release right here. Produced a company record adjusted non-GAAP EBITDA of $82.4 million. So they're trying to do the same thing. They're backing out a lot of those one-time transactions or non-cash transactions to say, no, we didn't lose $22 million. This is a non-GAAP measure, but measuring it this way, they made $82 million in the year. So I'm gonna start zoomed out. This is right on the 1 day time frame. So each one of these candles represents 1 day. So this chart goes back to September 29th of 2021. And that is one of our important days. You'll see I have a big white line right here. That is where Bitcoin bottomed out in the bear run it had in September. Most of the Bitcoin miners hit their low for the year on that day. So that's a day I measure against going forward. And then you can see I have a yellow line here. They ran up to $46.14 on November 15th. That was just a few days after Bitcoin hit its all-time high on November 9th. They were actually much higher than this earlier in the year, but I'm not going to use those numbers because I think this is more relevant. From their high on November 15th, Riot was down 71%. Now I'm going to zoom in a little bit to look at some price targets. Okay, so the first thing I want to show is just how much Riot has had of a run this week, because Riot is up massively. From the low on Tuesday to where we're trading right now near the end of the day on Friday. So that's just 4 trading days. Riot's stock is up over 43%, almost 44%. So again, this is not the end of the day number. That may change a little bit, but I just want to point out to everybody, Riot has had a gigantic run up this week. So if you look, it's running right back up to where it was about a month ago. So this is a little bit of a tipping point. If it breaks through this, it may continue to run. So this is where you as an investor, this is not financial advice. You guys have to decide what you're going to do. Is this a line of resistance that it just ran straight up to? Or is this run going to continue? Because this is nowhere near their recent highs or all-time highs. So if I go from where we're trading right now back to where they were trading on January 4th, basically the beginning of this year, which also happens to correspond with this white line, which was our September low. So you can see we went way below the September lows with Riot. They are beginning to recover. They're a lot of the way recovered, but they still have another 27% to go just to get to their September lows. So that would be one price target that I'm thinking about as an investor. The next price target I'm looking at is on December 3rd. This was the day of the Bitcoin flash crash. So prior to this, Bitcoin was trading at around $56,000. In order to get back to that price, Riot would have to go up 76%. So a 76% increase in the price of Riot stock would get them back to where they were before the flash crash. But remember, that was 4 months ago, and they have a much higher exahash rate than they did back then, and they continue to grow. So theoretically, they could get back to this point or beyond this point. That's as far as I'm willing to look right now. The other thing to remember is because of this giant run up, the risk reward equation changes a little bit, because if they were to dip back down, and you can see they've tested this purple line 1, 2, 3, 4 times. So if they were to dip back down to that, that's a 32% downside. So this is not the no-brainer that it was when it was sitting down here at its all-time lows, but there is still a lot of room left to the upside. Again, not financial advice. That's for you guys to decide. So that's my update on Riot. Thanks so much for watching, and I will see you in the next video.